Hey guys, this is Tyler Albrecht of Keaty Real Estate, and this is your 2018 market update. So, if you don't have time to watch the entire video, we have timestamps for each topic in the description below. Alright, well, we have a lot to get into, so let's jump right in. So, the MLS reported 151 more sales in 2018 versus 2017. That's a 6% increase in number of sales. And this is 46 more homes sold year to date than in 2015, which was our best year on record. So how did our volume hold up? Well, 2018 has outperformed every quarter, year over year, and we have $60 million more volume year over year. That's just slightly more than 2015 again, the best year on record for Lafayette Parish. So here's another look at 2018 dollar volume and how it compares to the last 5 years going back to 2013. As you can see, May 2018 was the best month on record for Lafayette Parish, and the next best month was in 2015. So as you can see, the average sales price has increased in 2018. This can explain why there is a much higher increase in volume than number of sales in 2018. We're still about 4,000 away from the peak, which was in 2015. And I thought I'd point out that Keaty Real Estate's average price is around $250,000, which is about 10% higher than the rest of the MLS. So this next graph shows the monthly pendings back to 2013 through September of 2018. As you can see, May was our best month in history with 383 pendings. Lafayette Parish only broke 350 pendings twice, and the last time was March of 2015 with 359. Also, it's good to point out that our pendings are up by 56 in September of 2018 versus 2017. This is a very good indicator of what's to come in the next 60 days. Let's take a quick look at the new actives. The MLS has reported over 2,000 more listings in 2018 than 2017. That's an 18% increase in actives. But many of these sellers are not leaving Lafayette and need to buy another house, so they become buyers as well. So more actives equals more sellers and more buyers. So one way we can get a pulse on demand and number of buyers is to look at foot traffic. This data comes from our centralized showing service, the system which realtors use to set up showings on properties. We compiled the number of showing requests for each month, and this is an indicator of foot traffic and demand. In March of 2018, we reported a record-breaking 6,000 showing requests. This trend continued through the summer, and September was the only month where there were less showings than the same month in 2017. Demand is up, and pendings are up, and closings are up. But are we losing our momentum? Here's another look at foot traffic by quarter. The increase in foot traffic indicates more buyers, but with more listings, this could also reflect the buyers looking at homes before making an offer. Now, let's take a look at Lafayette Parish inventory. So one way we can get a pulse on how the market's doing is to look at the monthly inventory or absorption rate. So real estate is a function of the supply and demand, and months of inventory can give us a gauge as to how much supply and demand is out there. So when we say there's 6 months of inventory, this means that it would take 6 months to sell every house that's currently on the market. 6 to 7 months is where supply is equal to demand and considered a neutral market. Home prices will only appreciate with inflation. Greater than 7 months indicates too much supply and not enough demand, and home prices typically depreciate. Less than 6 months indicates too much demand and not enough supply, and it's considered a seller's market. Prices tend to go up. So how is our supply and demand? As you can see, we have been hovering around 6 months of inventory for the last 4 years, and we typically see an increase in inventory towards the end of the year. Okay, so let's take a look at the numbers of listings entering the market. This MLS has recorded 2,359 more listings in 2018 versus 2017. That's an 18% increase in the number of listings. But I do want to point out that months of inventory has only increased slightly. This suggests that the new supply is meeting the demand. So the perception in Lafayette since the recent oil crash is that there are a lot of foreclosures and people are losing their homes. Well, let's take a look at the number of foreclosures in the Lafayette market. This graph shows the number of foreclosure sales going back to 2007 to September 2018. The foreclosure sales for Lafayette Parish peaked back in Q2 of 2013. Now we've seen a 50% increase in REO sales in 2018 versus 2017, but it's only 29 more sales year over year. We don't see any indicators that this will change significantly over the next 2 years unless the oil industry is derailed. We always want to keep an eye on what's going on with interest rates and where they're going. So we look at Fannie Mae, Mortgage Broker Association, and National Association of Realtors, and we average all their interest rate projections, and you can see it looks like we should expect the interest rate to increase slightly over the next year. The Federal Reserve Bank is expected to hike policy rates again in December and 3 more times in 2019. Strong employment and increasing inflation would support these hikes. So what does this mean to the average buyer? Well, if we take a $300,000 house today at 4.5% interest rate versus waiting to buy the same house in 2019 with a 3% increase in value and an interest rate of 5.1%, it's a $163 difference monthly. That's almost $2,000 a difference in 1 year. If you look at it over 30 years, the payments would increase by $58,000 for the buyer. So we turn to the Lafayette Economic Outlook for 2019 and 2020 by Dr. Lawrence Scott to see how Lafayette's doing and what to expect in the coming years. So in his Economic Outlook report last month, Dr. Lawrence Scott mentioned the hammering hasn't stopped, buy hope lies ahead. We are projecting that Lafayette economy will turn the corner in 2019, adding 1,400 jobs, and then move into a stronger year in 2020, adding almost 5,000 jobs. This is based off the assumption that oil prices will continue to rise to $80 a barrel. Dr. Scott and his team provide evidence that we could see oil prices rise to $72 a barrel in 2019 and $80 a barrel in 2020. According to Dr. Scott, there is every reason to believe that the global demand for oil will continue to rise. Supporting this view is the evolving growth in 2 huge economies in India and China. Dr. Scott goes on to say that the key to serious revival in Lafayette is the resurgence of activity in the Gulf of Mexico. Activity in the Gulf does not respond significantly to movements in oil prices. However, what offshore investors need to get comfortable with about returning to the Gulf is not only higher prices, but also a sense that the prices will be stable to moving upwards. Prices have now been rising for the last 3 years, and we're projecting another 2 years of rising prices. This pattern has already created evidence of some positive movements in the Gulf. So Dr. Scott finishes by saying, with oil prices rising to $80 a barrel, combined with a solid performance from the big 5 employers, being Stellar, Acadian Ambulance, the Schumacher Group, CGI, and LHC, it's expected to generate 1,400 new jobs in 2019 and a more robust 4,900 in 2020. Lafayette's economy will also get a shot in the arm from Lafayette's regional airport, a $90 million expansion project. Here is the overview of new versus existing. New home sales came in exactly where they were last year with no change, but new construction volume did see a 2% increase. And existing homes sold has reached a record high with 8% increase year over year. The volume of existing home sales is up 17% year over year. And here is all of Lafayette Parish at a glance. 2018 is looking like a record year. Sales volume up 11% or $60 million. Pendings are up by 12%. The 6% increase in the number of sales in the market is due to an increase in the number of lower priced homes. The 11% volume increase is due to the higher average sales price, up 4% to $224,000. May 2018 was a record month in volume and sales. Existing home sales are up by 8% in number of sales, but volume is up 17% or $63 million. Demand exceeds supply in the lower price range homes, and is a great time to sell if you're priced under $300,000. Some neighborhoods in the core of Lafayette are lacking supply in all price ranges. Prices under $300,000 are stable. Demand is equal to supply. That's 75% of the market. Higher end homeowners are moving down, and first-time home buyers are buying because of low interest rates and high rents. We are starting to see more upper-end homes selling and average price is rising. New construction sales were up by 15% and volumes up by 7% in the first 2 quarters, but slowed down quite a bit in the 3rd quarter, and year over year, 0% change in sales, and volume year over year is up like only 2%. Lafayette market as a whole is strong, but there are many variables. So let me know where you live and if you would like me to keep you updated on home values in your neighborhood. As always, if you want to keep a close eye on the market, you can always check out our monthly market reports at LafayetteMarketReports.com. I'm Tyler Albrecht with Keaty Real Estate, and as always, thanks for watching.